When you own a business, you want to make sure you take advantage of every single opportunity out there to build wealth and secure your retirement that is right and appropriate for you and your situation, and saves you on taxes, increases your income, and ultimately helps you live the type of a life that you envision for yourself. So today I want to talk about a strategy that may be appropriate for you if you have an established business that is generating regular, substantial, significant cash flows that you can put away without jeopardizing your current lifestyle or your business operations. This is a type of a retirement plan called a cash balance plan. And these plans are appropriate for small businesses that are owned by business owners who are, I would say, in their 50s, and you have a good decade or more to save. You are in a good place from income perspective and from lifestyle perspective. So what are these cash balance plans and why you should consider them? In a nutshell, what these plans are types of retirement plans that combine the features of a regular 401k, but also a pension benefit, what you would think of as a benefit. So they have both defined contribution and defined benefit features to them. And the reason you want to implement something like a cash balance plan is because IRS allows you to put away a significant amount of money in these types of plans. As of these limits changed, but as of 2024, as of the time of this recording, you can put away up as much as $409,000 tax-free, or more like tax-deferred, into a retirement plan and not pay taxes on those contributions to this plan. And when you retire, then you can take distributions from this plan and then you can pay taxes. And hopefully at that point, you're managing your taxes and your annual income much better, so your overall tax situation is good with this plan. So what are the features of the plan? Basically, it's an employer-funded plan where you as a business owner, contribute to both your plan and your employees' plan. And the contributions are mandatory. You cannot skip them. Once you set up your cash balance plan, once you work out the formulas and how you want to set it up, you cannot skip those contributions. So that's why it's important for your business to have those regular cash flows and not have ups and downs where you could have real hardship if you didn't contribute to the plan. And the reason these contributions are mandatory is because the cash balance plan is what we call a defined benefit plan, meaning that you promise to your plan participants, you commit to a certain amount of income that they will receive in retirement. And it is on you to manage the contribution and also manage the returns of those contributions to cover your obligations in returement. Here, what the plan has is these credited interest. So first, you put away money for yourself and your employees, and also you promise a certain amount of credit, interest rate credit, that will go to the benefit to the plan participants. And then also when they retire, they will receive specific amount of income from the plan. As you can see, this plan can be both a blessing and but also a little bit of a challenge for you to make sure that you both are able to contribute to the plan, but also have enough of these earned interest for the plan participants. And the way you do it is you hire a manager and you strictly manage the investing process Maybe these plans are typically more conservative. You're not going to put them in the small cap stocks or growth of mutual funds or ETFs, because you've got to have those returns time over time. And in that case, it helps when you have a stable interest rate environment. You're not facing dropping interest rates, so that you can earn enough of an interest on the money that you invest within the plan, so you can meet your plan obligations. Again, from tax perspectives, you can deduct the contributions from your tax return, your business tax return every year, and not pay taxes on that amount. Who is eligible for this plan? You set up the eligibility within a formula. You work with a specific cash balance plan consultant and an advisor, and they help you set up the plan. Because again, once the plan is set up, there is a few opportunities to change it unless you want to terminate the plan. This is a good plan to have in conjunction with a 401k plan. So if you have an existing 401k plan for your business, and you're at a point where you want to really accelerate your own planning, you have the cash, and you're looking for ways to make it possible and not run afoul of IRS rules. If you had a 401k for a while, you know that there is testing to make sure that you're fair to your employees. So this is an opportunity for you to accelerate your own savings in a conservative account, but also make sure that IRS is okay with that. And you're taking advantage of all the strategies that are available to you to grow your wealth. One thing that is important to know about these plans is that you cannot really run these plans on your own. You've got to have a team, because every year you run actuarial projections that determine how much money you can put away. You must put away and contribute to this plan. So who is this plan appropriate for? Again, it's for business owners who are generating good cash flow, whether it's a dental practice, an optometry practice, or maybe an established concierge medicine practice, or businesses where they don't have a cyclical cash, but it comes in consistently over time. So there is a ton more to these plans and just to retirement planning in general. But if you are at a point where you're looking at your income and seeing how much goes to taxes versus accumulating to you as a business owner and building your future and making sure that you can retire when you want to and live the lifestyle that you want to, this is a good opportunity to look into these cash balance plans and see if they are right for you. I hope you got some useful information from it. If you'd like to discuss these plans in more details, get a recommendation for an expert who can help you set up and manage this plan, or just take a look at your retirement plan and make sure that you're on track, reach out to me at the links below. I'm happy to chat. Thank you so much.